All right, ICT traders, I just thought to bring this to your notice. In case you are just visiting my channel for the first time, please do well to subscribe and please leave a comment after this video. Now, this is going to be a very quick one. It's just my journey trading Euro USD. For the past 2 weeks now, I've been on Euro USD, and that is because I've done a proper technical analysis. I've done a proper top-down analysis. So that's exactly what you're going to be learning. Um, Now I'm going to be discussing or analyzing Euro USD from the general point of view. Talking about the general point of view from the very higher time frame, which is look at the weekly time frame. If you notice this particular time frame, you discover that price has been bearish. Euro USD have been bearish. It has been trading down, down, down. So, but recently from this data right here, I decided to pick a bias, and that's how I picked the bias because when you look at the higher time frame actually helps you to pick your bias. Before I come streamline to my entry time frame, I want to show you something. You notice the market actually break down here. There is a shift, there is a market structure. I'm sorry, there's a um break of structure here. Okay, BOS. There's a break of structure here from the higher time frame point of view, guys. From the what will I call it now? From the weekly analysis. Now, ICT said something, and I also learned it from my mentor that actually introduced me properly to ICT. Shout out to Solomon King, that whenever liquidity is taken, you notice there's a sweep of liquidity around this low, there's a sweep of liquidity, but what exactly sends the price back into retracement? That's exactly what you should ask yourself. Whenever price breaks structure down or up, it swept liquidity. We call it has swept the external range liquidity. This is the external range liquidity. If you want to know more about different types of liquidity, you can put it down at the comment section. And whatever you want to know, you can tell me to make a video. If I have the idea, I'm going to be making a video to you guys. All right, looking at this particular trade, you notice that there is a fair value gap. Don't over don't underestimate a fair value gap because of the range of the data. Let me pick these two so I can know where the okay, around here. Sorry, let me pick this other one. Pick this one here. Okay, so here I really want to know good. So there is a deep sweep of liquidity here, 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 and even here. And guess what? I actually use this line. I use this line to check if for my fair value gap, because the first fair value gap is what sends price into retracement mode. Watch this. You see that? You see there's a very tiny fair value gap here. Not really tiny because it's weekly. See that? This point here. This point here, guys. This point here. Watch what I am doing. I'm doing a general. Now, what am I doing right here? What am I doing in this big time frame, this higher time frame? I'm deciding to look for my bias. My bias. See this? You see that? You see how price, this fair value gap was used as support. Now, when this fair value gap supported this price, it went back. All right. Now you notice that from this swing high here to this swing low, swing high to this swing low, you notice that this zone here is actually price came into the 50%. Now watch this. What is the institutional reference point that is there? 50%, anything in 50%, you can decide to sell at premium. Look at this. What can you call this, guys? If you can say it, then if you can see it, my mentor will always say, you can say it. Look at it. This is a volume imbalance. Now, a volume imbalance is the a situation whereby two candles doesn't touch with the body except by the wick. So this volume imbalance is another powerful institutional reference point. There are basically 7 institutional reference points that ICT actually discussed. If you want to know more about them, I'm going to be discussing them in my channel. Exactly under the playlist, I'm going to be putting down the playlist titled ICT for Beginners. You see this price tapped into this volume balance at what part of the at premium? Okay. Now price is meant to sell down. Okay, price is meant to sell down, which it did briefly. It sold and it came back again into what? Into this volume balance, and it keeps selling down. Now he didn't have enough momentum to do what? To clear this liquidity, because this is the next external range liquidity that needs to be cleared, because generally, according to the weekly time frame, Euro USD is bearish. Take it or leave it. Now, a few experience I had in the market, whenever price retraces into the 50% of your Fibonacci, don't expect 100% reversal to taking out this what? This low. Price is only engineering liquidity. See this? Price is engineering what? Liquidity. This is a buy side liquidity. So what price wants to do? Watch the intention here. This is pure top-down analysis and what I also call the narrative of the market. Price gave this spike up, an indication that the bearish might take place. The bulls might take over. To do what? To take this particular liquidity, this buy side liquidity. Buy side liquidity. All right. Buy side liquidity. Buy side liquidity, guys. Buy side liquidity. This is the target of the market, guys. So what happened? How will he achieve that? So I looked again. There was a minor sweep of liquidity here, which I can call a very minor market structure shift. A minor market structure shift, MSS. Now, what is the function of this market structure shift actually? Is actually to engineer the move up to sweep this liquidity. So this is where we pick our bullish bias now, temporarily, okay? Otherwise, if you look at the general weekly analysis overflow of the market, it is bearish. This is the next liquidity, that's the liquidity pool to be swept, okay, external range liquidity. But before it does that, it has engineered equally, ICT call this equal excuse me, it has engineered equal high. You see that? Relatively equal high, and ICT call this a sweet spot for the market. So what happened? I want to show you something again. Let me quickly show you something. Whenever you see this kind of big fair value gap at higher time frame, guys, pick up your Fibonacci too. There's always every segment. There's always segment of from this high, from this to this. Okay. All right. So you see that? See that? Now, this is the 75%. This is the 50%. So I was actually waiting for price to hit this 50%, but at 75%, price reacted, okay? At 75%, price decided to react on its own. So I came down here. Okay, let me take this out. I looked at this 75%. All right, so now this is another information you need to know. Now, price does this kind of thing, okay? It reacts quickly, especially at the nearest segment of the nearest segment of a big fair value gap like this, because there is a what? There is a liquidity to be taken. Take this. I have observed this, I've backtested this many times. Whenever price is close to taking relatively equal high or relatively equal low, price might take its time. So if I were you, if you're in that trade, you exit that trade or you take partial. All right. Price might take its time. So what price is doing is that it needs a support to push it up to sweep this liquidity. That's exactly what I see here. And that's what is playing out. So look at this very, very well. So when price got to this 75%, look at the moment, look at the spike up. Look at the wicks. It shows rejection. It shows a very powerful rejection. And guys, it has been moving up. All right, so this is the top-down analysis part of this video. The next part is making use of market structure shifts. So I actually came down to 4 hours. I came down to 4 hours time frame. Yeah, these are the time frame. Sorry, I'm having a little code. Now, these are the time frame that you will come to. Now, this was the trade I took, okay, while still in that 75%. While taking note of this 75% and part of that weekly fair value gap, price was making a series of what? Higher high, higher low. You see that? It broke the structure here. This was a swing high and it created a new swing high. And guys, it returned to this other block. There's another block here. This candle here is another block for a higher time frame, or the series of down close candle according to ICT is called the other block. So there's another block here. Again, there's also what? There's a fair value gap. So I actually entered a trade around this candle. When this candle was for me, because I knew it was going to retrace into this. How did I know? Let me pick up my Fibonacci tool, and this is the next swing. Let us swing low down to this swing high. So I discovered that at equilibrium, okay, you see this at did I say equilibrium? Yeah, no, at discount, okay, at discount, price is going to move into this discount. So instead of me coming to this place to play safe, instead of me taking my profit right here, I decided to use the low of this candle. The low of this candle. Why? Because this candle has traded into this fair value gap. There's a fair value gap here. If you notice, there's a fair value gap here. Guys, you need to train your eyes. There's a fair value gap here, which this candle has traded. Let me change the color so that you can see it. See that? See that fair value gap right there. So this is the order block. So if you are trading, if you are selling Euro USD from this point, you know you are counter trading. Why? Because at 4 hours, it's actually retracing. So there was a market structure shift. Remember at 1 week, at weekly time frame. And guess what? There's another market structure shift here from this point down to this place. So it's moving up. You see that? So this is the part of the video where you see this is a market structure shift here, and it retraced back into it, and price is taken out, is going straight up because this was the last low, this was the last high. It retraced and it needs to take this high out for you to see that there is a market structure shift. So it shifted structure right from this point. So now you notice that my weekly time frame is actually aligning with my 4 hours time frame, creating market structure shift to the upside. All right, so it's retracing down here to target that liquidity I marked. Yeah. Okay. Now, so that is it. That is it. So now let me go back to 5 minutes time frame. So I mostly enter my trade at 1 minute or 5 minutes, but this time I think it was 5 minutes. So this is a part of the video where it's going to be showing me I'm going to be showing you the mistake I made actually. Okay, I made a mistake. Do I say mistake? I don't want to see it as a mistake. However, I want to see it as a partial mistake because I wouldn't want to take such kind of a trade, which I did, which was very aggressive. And that was because I was almost blowing my account. All right, so let me okay, let me still leave it. So you don't get confused, I'm going to be showing you. All right, so this is okay. So what happened was that I saw this trade here. I saw this move here at Asian range. So market broke down like this. And I say, hooray, I got a market structure shift here. I got a market structure. Some of you be saying, yes, of course, this is a market structure shift. Well, that was what I thought too. but it's not a valid one. So with this market structure shift, you notice there's a fair value gap here. So I pick this fair value gap here. See that? I pick this fair value gap. See that? So market are not actually taking this. I was hoping that this fair value gap will hold price, and I put my what? My stop loss just right above this, and that was how the market came. And it did as if it was going to go my way, but boom, this spike came in. My eyes opened, and I realized there is no valid market structure shift without a sweep of liquidity, guys. If there is no sweep of liquidity, don't see a market structure shift as a valid market structure shift. So when I saw this, I said, no, my account is about to go for it. So I waited. I knew after this clear liquidity, well, that's why we call it liquidity sweep, because my stop loss was actually here. You see why we call it sweep of liquidity? Liquidity simply means money. People's stop losses stop being a liquidity. So this is the mistake I made. So I waited. So I looked at what the market was doing. It created, after sweep of this liquidity, look at this other block, a down close candle before the sweep of liquidity. And guess what? It created a swing low. There was a swing low here. See that? That's one. It created a swing low there. It created a swing low here. And before the sweep of liquidity, there was a break of structure to the upside. A break of structure to the upside. You see that? A break of structure to the upside. And also a break of structure to the downside. What is this telling you guys? If you know the answer, just pause and test yourself. Break of structure to the upside and break of structure to the downside. What is this? What is that? See that? See that? This other block here. See this? What does this tell you? This is what? A breaker. The whole of this range. This is a breaker. See that? That is the breaker. That is the breaker. Now what happens? I took my Fibonacci 2. Is this worth it? Is this entry worth it? And I did it to this point, only to discover that this entry does not worth it. Why? My breaker is in my discount. I can't sell. But I was very stubborn. My actual entry is supposed to be here. If price had returned to this fair value gap, I would have entered at optimum. I would have entered at institutional order flow entry drill. Okay. I would have entered at the what? At the opening, the high of this candle. Boom. Aggressive, guys. And I put my stop loss a little bit above this because I know it will not get back there. But however, somehow luck shined on me. So I entered here. I short the market here, but it was expensive, guys. I short the market right here, and I left the market here. I left the market here. My stop loss was just here. Okay, I took the risk. I knew the market was going to reverse. So you see that now when the market came down, this is the proper. Let me take this out. This is the proper entry now. So you see that this is a proper confirmation. There is a proper market structure shift here. This one is the valid market structure shift because it is valid because there has been a down close, a downward movement from this point here. All right. And guess what? There is a fair value gap, and price came in here and respected this fair value gap properly. See that? It respected, even though it closed a little bit above it, but it respected the fair value gap. And actually, my target was right here. This low, that candle. Remember that candle I told you about? That low of the candle in that weekly time frame. But it actually passed there. this would have been a very sweet target for you if you had entered here. So you see, this is to be careful. Like most times we see that you can enter at this point here, and then guys, you make your how many pips? That's about 20 pips. The 20 pips is something. And then you put your stop loss a little bit above here. Okay. See that? So this should have been your entry right here. But remember, if you go back to my weekly time frame, let me clean all this. Let me clean all this, guys. If we go back to the weekly time frame, remember I told you the weekly time frame is actually the main short. Okay. Go back to the weekly time frame. Remember, price has been taking um um sell side. Okay, it has been going down, create up. So this actually is in a retracement form. Okay, but it retraced into what? Into 50%. Into 50%. So all these are only creating liquidity. So don't think the price. So before price takes out this low, it has to sweep this liquidity above here. So price is going to be bullish. So this is like a projection for future trade. Okay, I'm making this video on the 4th of March. Oh, sorry, on the 1st of April. 1st of April is actually my baby's birthday month. 1st of April, and um all right. So in Nigeria, so this is buy side liquidity. Like I said, buy side liquidity. So my target where I was trying to tell you, it was at 4 hours. Okay. Okay, buy side liquidity. So this is our sell side liquidity. But before it takes the sell side liquidity, it has engineered this. So you need to take this into this point around the what ICT call the optimum trade entry. Okay. Price is going to come here. That is my analysis. Price is going to come around here. You can see it will sweep all this liquidity. In fact, right down to this point. Okay. Okay. It's already in this volume imbalance already. So price will take this out. I believe so. Okay. If the volume imbalance does not send price down further, it will sweep this liquidity right into this point here, guys. I want to believe into either this fair value gap, all right, or this. That is my very long, this is a very long projection, but I am not actually trading the projection. I'm only using it as my bias. Like I said, I've been on Euro USD for like 2 weeks now. I've been trading Euro USD. All right. So this is going to be buy, 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 buy. So when, in case you don't have any trade, you don't have any pair to trade, you're confused, just look at Euro USD and just, you want to buy. Don't try to do counter trading if you're a newbie. Okay. Okay, counter trading is for professionals that understand the narrative. So let me go back to 4 hours again to quickly point out to you that target I told you about. 1 minute. No, no, no. Actually want to pick 4 hours. 4 hours, okay. Okay, so 4 hours, guys. So this was it. So the trade I entered was actually from this point, and my target was this low. I don't beat more than what I can chew. I knew the market was going to come back to this series of down close candle, which is the order block, and it came back there. That is the proper discount. So price started moving up. So what is the trade analysis for this now? If you can see a market structure shift here, go back to 5 minutes. If you can see a market structure shift at 5 minutes, then you have your trade. Okay, sorry. At 4 hours, I think I actually already did this analysis before I started making this video. Okay, so there is this. I want to make use of this. Let me make use of this other block here. Okay, this other block. Then it's from that other block that I need my market structure shift. Market structure shift. Market structure shift. So from this point, All right, from this point right now, this market has been creating a series of down close. Okay, so a lower low, lower high. You see that? There's a high high, swing low, takes out this. You will trace into this other block here. And guess what? It refused to what? Take this out. That shows weakness. Weakness on the bearish, on the bulls, I mean the bears. See that? It's supposed to take out this low, but it didn't. So there's a market structure shift right here. So market took out this last high in actually in a jaggy and consolidation manner though. But that's a market structure shift, guys. See that? All right, it's a market structure shift. So analysis is that price has taken Asia high, okay? It's sweeping liquidity, right? It's sweeping liquidity. I don't know how far this sweep will go. Okay, down here. So that's a buy side liquidity on a very small scale. So I'm expecting price to reverse from this point here. So I'm expecting price to reverse from this point. So if market sweeps liquidity up into this point, because this is the nearest fair value gap. I can't see any other fair value gap, okay? So if it gives you a market structure shift here, guys, don't be deceived. It's inducement. So if price has taken liquidity, then we can just, but don't do this. This is counter trading. But for me, if I see a correct market structure shift from this point, I can sell the market. Very sure. Something like this. Okay. Into this point right here. Into this point. Then I see a market structure shift right here. Then I enter at this point. Okay. All right. There's a market structure shift here. Then I short the market from this point. Put my stop loss above that, guys. And you know what? I'm going to target only 50%. I'll target at this point because I know market might reverse here. 31 pips. This is going to be a very sweet trade if it works out, guys. Just, I can even risk 10 pips. I don't mind. I don't mind. I don't mind. That is like 3:1 or 1:3. See that? All right, so guys, this has been a very long video, but it's actually worth it. Do yourself good to watch it over and over and over again because this comprises of the past and then the future, what the trade is going to talk about. So you have learned three things. One, you've learned how to do top-down analysis. You've learned how to make use of market structure shift. That's valid market structure shift. And then I shared my mistakes, even though it paid out for me. All right. So until we meet some other time, make sure you have a safe trade, guys. Bye.